So there you go, this is just an update on the earlier two videos of day trading for you. Day trading. What we've done? Nothing. Okay, so I've lost about £1,000 in the last, what's the time? It's about half three, is right? No, it's about 20 past 4, so it's been nearly 2 hours. And I said early on about me trading balance in this practice account. I've lost about £1,000 off 131, so it's 130. I think lose any, even though it's a practice account, if it's for real, I wouldn't lose any sleep over £1,000. There's no stop loss on the account. I know roughly what it's going to do. We're in the middle of the week, so we're in the middle of the week. Oh, it was 11th, 12th. So it's about 11th or 12th of the month. Options close around the 18th, so, and you've got a weekend in between that, so it's Wednesday. So you got Wednesday. See, this is usually in the middle of the week. It can rally a bit. May do something tomorrow. The stock market may do something tomorrow. I don't know. And Friday, I always class Friday as a half day, so I don't really worry about Friday. Unless it's going to plummet. If it plummets, depending on when during the month that it does plummet. If it's early doors, like if it's in the first week of the trade, in a 4-week trade, 3 or 4 week trade, I don't much care what the stock market does. So right now we're coming towards the end, so I'm into my 4th week effectively. So I've had the trades open for 3 weekish, 3 and a bit weeks-ish. So I'm looking now for opportunities to either close at a profit. So let's just, okay, well, although my profit and loss is minus 27 grand, but in the scheme of things it's nothing. Because I've got enough liquidity in the account. So I've got 130 odd grand in my practice account balance. But the profit and loss, I've still got liquidity. Me trading balance could halve. And it wouldn't really bother me because there's enough liquidity in it for the account to tank the stock market plummeting by 50%, but it won't. It might, but it won't. So, although I'm day trading now, not even looking at the screen. I haven't got a computer. I don't need one. It's like you see the day traders. They've got 1, 2, 3, 4, 5 screens or whatever it is. Yeah, they've got double decks. They've got the screens up here, big PC screens here. They've got the screens here. They've got this. And yes, you can make a lot of money, and you can. But you're waiting for stocks to go from here to go almost like straight vertical, and that takes a lot of research, and you've got to be on it, and you can't always trade them. Timing's everything in that, but it's not where I want to be trading, because you don't want to put extra pressure on yourself trading. Trading should be an easy, relaxed way. It should, and it is. It's like you'll see them on YouTubers. I've got nothing against them because I know how to trade as well. They trade the little short gaps, trading up the sequence and down the sequence and stop, and then another sequence and up, and then another sequence and then down, stop, start, stop. I've done all that, so I know what they're doing. I know why they do it. But why would you want to put that much? And you're waiting to buy the dip, which is the green on the chart is when it's going long, or option call, which is you make money when it goes up, and the red when it comes down is buying the dip, or going short, or selling a put, yeah, or buying a put, selling a put. So what it is, so it goes up like that. It goes up for, say the width of my phone, right? And they want to buy it, so they miss all this. They miss 100% because they don't know where this is going to go. This could go like that. But when it's gone up 100%, some traders buy. They don't buy the 100%, which they don't know it's going to do. They know that what goes up comes down, and they buy. They go on to shorts selling or buying the dip, and buy the red line going down, and they want 50% of the. So that the green line going up is 100%, and they want to come down to about here on the short sale, and then stop the trade here. So they've made 50% on that one trade. But then again, and then you'll see. But as I'm in it, and I'm not actually. Whatever it goes up, I'm in there. So let's just say it goes down here and it goes back up again. I'm still in that, aren't I? So I'm in all the days, all the stock charts, about 22 days of trading. I'm in those 22 days, aren't I? So it goes I don't care. All I've got is this bit here. As long as this, where I start my trades, is as long as where I finish my trades is higher than when I start my trades, I've made a profit. And the profit divided by the days of the month is a daily profit without having to do the daily trades. Because it's okay, but when you get the trade, the stock market goes like that, it starts off and then around about 1 o'clock, 2 o'clock, they're all like then closing their trades to make the profit, right? So they're coming down like this. So okay, so you want to short it when you can see it's happening like that. Sometimes people short them, like that. But it is like that. But I've got 22 days of that. I don't care what happens. As long I just know that at some point during the month, the stocks that I buy within 22 trading days will have usually a profitable day. And then, you see, when you're day trading, you're chasing the profit. You're trying to find the trades that make the profit. When you're swing trading over 22 days in an option, and again, I usually only ever go call because a recession is that. But over 10 years, it usually does that. So long term, it doesn't do that forever. It goes that way. Problem is, it just goes that way and it comes down and it goes up and down. But overall, the graph chart, you'll see it and it goes like that. But just when it goes like that, stock chart, it's just thousands of different little graph sequences. So when you know, and you'll see, I've made this and it's gone like that. See, I learned my charts on Mountain View in when you're trading. You do day trade now on candlesticks, the red and green candlesticks. But for me, I'm on. I learnt Mountain View, the sequences, like the Bitcoin now. The Bitcoin graph. If you ask Google Bitcoin, you can. The graph it shows you isn't a candlestick graph. It's a Mountain View chart. It's a Mountain View. The Mountain View stock chart graph for Bitcoin. So, although even like the FTSE, you ask Google FTSE, it doesn't show you a candlestick graph with the green bars and the red bars, and it doesn't show you that, does it? If you look at the stock market the day tradings on YouTube, they're in candlesticks because they're going up by the dip. But if you know the sequences, and I know the stock chart sequences, 7 trade dip, by the minutes, by the hours, by the days, by the weeks, whatever, by the months, in Mountain View, it does the charts do a certain thing. Bitcoin is at that in the mountain view in Google chart at the moment. Bitcoin is at the mountain view point where usually it comes down. If it hasn't gone up, it comes down. Now, okay, I think it's gone up a bit anyway. It's around about $15,600 at the moment, but it's never been. This is waffling. I was waffling, but as much as charts are okay, just think how many hours you've got to waste going up the thing, down the dip, down the dip. All that, or you can trade. Leave your trades open. Over 22 days of trading. As a rule, I'm not saying as a rule, we could have been in a recession, it's that. But the recession, even this pandemic thing, the virus thing, it came down. It didn't take that long to come down. It just took forever. Not forever. In 6 months now, we're trading now. The FTSE is trading better. Not better, but it's the highest today. It's been since I think anyway, since February, March time. So if it goes down, it's only going to go down to about, I don't know, whatever it goes down to, but it's going down towards where it was at March time, FTSE price. Too many people worry about the stock market. But as a rule, the stock market, over time, take any chart you like, Dow Jones, from the history from the Dow Jones, and just put on, ask Google Dow Jones price, and it'll give you a chart. Click along the button, press the max button, and you'll see that over time it's like that. FTSE it's not as obvious, but it is still like that. Right? You don't see the FTSE like that long term. Like that, long term. Bitcoin, since 2009, whatever, yeah. At the moment, it's gone like that. It went like that, and it's now back up there. People worry too much about it. They take a loss, they have a financial loss, and the first thing they do is sell the trade. They panic because they can't lose any more money. Once you're confident of losing the balance, losing a bit of money, you're not scared of losing money. You can. It's like going over a big wave, knowing it's a big steep thing the other side. Once you've done it a few times, it wasn't that bad, was it? And that's stock market trading. Don't panic when you trade. Trade with confidence, knowing all the businesses that have been about, the big supermarket chains. They've been about for 200 years, 100 years, 200 years. They've been through recessions after recession after recession. They're still here. They can't conquer Amazon, but that's a different matter. But there you go. So the recessions, as long as you prepare for a recession every so often and know how to trade through it, as a rule, what can go? Everything can go wrong, but what can go?